Welcome to Markets Now. I'm Michelle Rourke with Randy Martinson Ag. And grains all started off to the plus side this morning, but we see wheat starting to slide, at least in the winter wheat categories, while the livestock futures are seeing some pressure. And Randy, okay, let's start off talking about some of the support that we're seeing in corn and soybeans. So we had a lower day yesterday, saw maybe some profit taking and some farmer selling. Today we come back in, we're a little higher. Is this about the president talking about a possible China deal?
I think it is. I mean, I think that's the big news right now. And that's the one thing that's been kind of leading the market here, I think, over the last couple of weeks. And that is the hope that we're going to see exports or demand increase or improve for the U.S. markets and or the U.S. products. And I think that is what's helping to keep the soybeans rolling. We're also at a point, I think, where, soybeans might need to try to hold a little bit of premium or a little bit of its price differential with corn, just because corn keeps rallying without soybeans, that's going to continue to shift some acres away from soybeans to corn. And I think that's something soybeans can't quite handle at this point.
All right. If you looked at yesterday, we went up, made new highs for the move in both corn and in the wheat, and then had not a good close. So you felt like maybe that was some topping action, but apparently we're not ready to put a top in this corn market yet.
I don't think so. I mean, I think it's a little early for that. I mean, we normally don't put tops in February and in March. It's usually more April and May. So it's not to say that this market can't come under some pressure and see a little bit of a sell-off. But I think right now, with the talk of the demand and the fact that our old crop continues to have a little better demand than what USDA is projecting, I think they've got to come in and increase exports and possibly even ethanol, which will tighten our stocks even more. So I think that's what a lot of the trade is looking at, is that, we've got smaller stocks than what USDA is saying now, and this market can't go down much because it has to rational. It has to do some rationing.
Yeah, and export inspections this week were very good. I think we're 35% ahead on our total pace versus last year, and that really speaks to your point. Okay, so the fact that soybeans, though, we're in the midst of harvest in South America. Things have improved from a weather standpoint in Argentina, but are you surprised we're not seeing more pressure from that and the fact that we do have harvest going on in Brazil?
Well, a little bit, especially with, Argentina. I'm probably not so surprised because I think those rains came a little too late to help the crop. We're kind of seeing that on the corn side is, corn conditions are pretty low and they've lowered their corn, production estimates. But on the soybean side, with Brazil harvesting, we know it's going to be a record crop. It's just a matter of, how much above 170 are they going to be because of their bigger acres. So that it should in itself be putting some pressure in on soybeans, but the soybeans are holding. And I think that's a function of just the fact that, we can't get soybeans too much cheaper than corn, or we start to see a little bit more, of the direction head towards corn acres. And I think that's holding soybeans up right now.
Yeah, and as a result, soybeans have held, I think, both the 50 and 100-day moving average. We check them out and bounce right off of them, don't we?
We do. We got some decent buying that comes in once we get down to those levels, and I think that will continue. At least for the short term here. Also, right now, like I said, corn demand's good. Soybean demand is not as good. We're seeing, marketing year lows almost for inspections and for sales. So it's got to be the corn that's helping to hold that market up.
Yeah, no doubt. Going back to what you said earlier about this China deal and the fact that you said exports are slowing down in the soybeans. China's moving over to buy Brazil's crop. Can they really support a big China deal with the United States? And why would they buy from us when Brazil is so much cheaper?
Well, I mean, that's a really good question. I mean, at this point, I don't think they would. I mean, they're very astute businessmen. They buy where it's the cheapest and where they get the better bang for their buck. And right now, they're getting, South American beans, $1.50 cheaper than U.S. beans. So they're going to continue to buy there. But they will need to buy some from the U.S. Now, they've been buying, I think this year they're at about 20 or 22% of what their needs are coming from the U.S. They might bump that to 30%. But I don't expect that they're going to come in and buy aggressively from the U.S. Hopefully, we can get some other crops that come into play. Maybe it won't be soybeans, maybe it'll be wheat, or maybe it'll be corn. But I think soybeans are going to be, probably more Brazil-driven than anything.
And the wheat market, as we mentioned, opened higher, but the winter wheat contracts are kind of pulling back here. Are we seeing profit taking because we've had a nice run, or are we removing a little weather premium?
I think it's both. I think we're seeing some farmers selling, as you mentioned. We've had a good run in this market. We've gotten some levels that are attractive to start pricing at again. So I think there's some of that taking place. But I think some of the weather premium, and they're talking about the cold snap is over for the now. It's going to warm up. It's going to be dry for the next couple of weeks. That might be somewhat supportive. If the crop starts coming out of dormancy and then we get another cold snap, that's certainly going to be supportive. But right now, I think they're looking at more favorable weather, and that's kind of what's seeing the market get pressure today.
Minneapolis is up a little bit. Why? Is it bucking the trend?
Minneapolis, I think, has to try to hold on to acres. Right now, we're still expecting that we're going to see 1 million less spring wheat acres because of the poor quality crop last year, and again, producers are kind of tired of raising wheat and wondering what the discount's going to be. So I think that is going to push acres away. Minneapolis needs to try to hold those acres, and I think that's why the market's staying stronger.
I also want your opinion on the headlines about what's going on in the Black Sea. Smack talk between Zelensky from Ukraine and President Trump. Obviously, this is escalating. The market acts like it doesn't care.
And I don't think the market does. I mean, we've taken that war premium kind of ended a few years ago, and you look at what the production and the exports coming out of Argentina, they've kind of been stable. So there has been a reason why we've been ignoring the war in the Black Sea area. I think the bigger thing is now that the bigger press is coming from, will we get some sort of a peace deal done? And with Russia closing in on some lithium deposits, I think that's going to create more of the drive of ending this war than anything. But I don't think it's going to have any impact on the corn or the wheat market in the U.S.
All right, something to watch. Cattle market, we are down again this morning. Can't fall too far, though, with this discount to the cash. But what do you think? Are we just squaring ahead of the cattle on feed, or what's pressure in the market today?
Yeah, I think it is. I mean, we're also looking, I think we pushed feeder cattle too much this week when the break of that new outbreak of the new screwworm in Mexico. That sent the feeder cattle market sharply higher on the expectation we're going to close the border again. The fact that we didn't brought the market down. So I think we need to true up a little bit between live cattle and feeder cattle again, that those spreads are getting a little too wide. That incentive is disappearing again. So I think that's part of what we're seeing. But I also think, we're looking at some positioning ahead of the cattle on feed report. I think the report's going to be friendly. I think placements are going to be a little lower, but I think that's also could be signing, a signal that this market's getting close to the top.
Yeah, we are still holding pretty key support, though, and especially the April live cattle. We're above the 100, we're above the 200-day moving average. Do you think as long as those hold, we'll be fine? Because again, futures are at such a big discount to the cash.
Most definitely. I mean, cash is what's holding this thing up, and I do think those for now, as long as cash stays strong, the market can't break that much. I think if we start to see the cash market, break or see some a little more pressure come onto that, then we could start to see a little bit more of a pullback as far as both the live cattle and the feeder cattle are concerned.
And hogs had an ugly day yesterday. We're seeing some follow-through selling pressure this morning, but the cutouts have kind of rolled over. Is that what's going on, or are the funds just taking some profits?
Well, I think we're seeing some fun profit taking, and I think we're also seeing some spreading between the cattle and the hogs. And I think, live cattle, I think, got to become the sell against the feeder cattle and the hogs here earlier. I think they're starting to unwind some of them from earlier in this week.
Okay, thanks so much. Randy Martinson with Martinson Ag. That is Markets Now.